Hello everybody, this is Toni Turner and welcome to the market now as of about noon on Friday, July 19th. U.S. stock indexes advanced this morning on solid results from Microsoft, which lifted technology stocks and added to an upbeat mood following signs from New York Fed President John Williams that the central bank would lower interest rates this month. That's always good news. Market is up so far, but it has begun to slip slightly over the last few minutes. And on that note, let's look at the three charts that could give us some insight into the week to come. First of all, as we usually do, we're going to look at a daily chart of the S&P 500, symbol SPY. This is the tracking stock or exchange traded fund that closely follows our S&P 500 index. Now, when I captured this chart today, again at about noon, the SPY was trading at $299.37. That's about $29.93 on the S&P 500 itself. Now, it's not far from its new all-time closing high set on July 12th at $300.65. That's a little over $3,000 on the S&P 500 index. So we keep on making new highs here, new all-time highs. The prior all-time closing high was on July 3rd at $298.80. So as you can see here, we've got a nice uptrend going. The SPY is walking up its 20-day moving average, the red line on this screen so far. Again, it did gap up this morning, as you can see on Microsoft News, but is falling ever so slightly after that. Of course, it is summertime, and we do have low volume in the market right now. We do have more support again coming in at this 20-day moving average, as I said, at about 296. We have more support coming in here at 290 or 2900 on the S&P 500. Of course, at the green line, the 50-day moving average at almost 290, 289 and change. And then on down, which we hope we won't see, on down here to about 274 or so, where the market made March lows on the tariff trade talks. So we have a lot of support here right now. Today the market's kind of apathetic after it gapped up. We'll have to see in the coming week if it can continue its uptrend here or if it has to maybe rest for a little while. The RSI was bumping up and has been against its overbought line, but hasn't gotten over it. That's, in a way, that's good news that it hasn't climbed over it, because that can sometimes mean a slight downturn. MACD here is neutral. So we will keep an eye on the SPY in the coming week to see which way our market will take us next. And now let's go on to the Invesco QQQ. As you all know, the QQQ represents the NASDAQ 100. That's a very important index in the market. As I told you before, the top 5 holdings of the QQQ are Apple, Microsoft, Amazon, Facebook, and Google, and together they represent 43 of the fund's holdings. Now, when I captured this chart today, the QQQ was trading at $193.10. It rose to a new all-time closing high on July 15th at $194.15. It came down a bit this week. Of course, Netflix earnings were not too good, but it gapped up this morning on Microsoft earnings, and then it has just been kind of consolidating or slipping a little lower on low volume as the day has worn on, I should say. So we're still in an uptrend here on the Qs, a very nice uptrend. Again, walking up the 20-day moving average like the SPY. Should the Qs need to come in a little bit here, there's more support at 188, certainly support at about 185, 184 at the 50-day moving average, and hopefully we don't have to look at or consider support down here at about 175 as the 200-day moving average. Now, I have drawn a bottom trend line in coming up here, and this would provide some support at 177, 176 potentially. So we'll have to see in the coming week if the Qs can continue their uptrend, just the same kind of as the SPY pattern, or if it needs to come in a little bit here and take a little rest as we get 2 more solid weeks of earnings coming in. Our last chart today is a chart we haven't looked at in a while. This is the SPDR S&P Metals and Mining ETF, the XME. This has 27 holdings, including Commercial Metals Company, AK Steel, Steel Dynamics, CDE, that's Core Mining, U.S. Steel, and Royal Gold. So this covers everything from silver to gold to copper and so forth, even a few coal stocks in here. Now, the XME, I'm liking it here. Most every ETF I've looked at, most sectors right now are extremely overbought. However, metals have had a rough time recently, and but in the last couple of months, it has been rebounding. So I'm looking at, of course, most stocks dropped in December down to 2 lows, and so did the XME down to 25. This is, of course, an equities ETF. The XME rose to a high, February high of about 32, and then started coming down here down and broke below the 50-day moving average. Finally, in May, again, most all equities dropped. Most all dropped in May on the tariff news, and of course, metals and mining would, because that's such an industrial play. It recently started up here, climbed back over its 20-day moving average, back over its 50-day moving average. So we had a V-shaped recovery here, a little bit of a lazy one, but we had one. Came up, made a high, moved down, dropped back down to its 50-day moving average, and now it's starting back up again. Now the XME is back above its 20-day moving, its average, its 50-day moving average. Now we'll have to see if it can climb above its 200-day moving average, which may cause some resistance here at $29. Today, again, when I captured this chart, the XME was trading at $28.47. This is not exactly a double bottom, but it's pretty darn close to it. And I am watching this action here. Of course, we know gold and silver have been going up recently. If the XME is positive on Monday, and the RSI here is not overbought, the MACD is neutral. If the XME is positive this coming Monday or the first of the week, I may add a very small position, I'll tell you why small, of the XME to my portfolio. It's going to be small because I'm watching this 200-day moving average coming down here. So I might, if it again continues to go higher, I may add a small position to my portfolio with a close below the 50-day moving average, which is coming in here now at $26.95 as my initial stop. If the XME can move up and move over the 200-day moving average, again coming in at $29, then I would add to this position. Otherwise, I'll keep it small until or if that happens. Now, if the XME does move up and over the 200 and keeps going, I will, of course, turn my stop into a trailing stop. So with that said, you may want to keep an eye on the XME in the coming week. And now on to the coming week's economic reports. But first, please join us this coming Monday, July 22nd, for our next session of Toni's Market Club. Actually, this week, Bob Lang from explosiveoptions.net, and author of the book Know Your Options, and one of the technical analysts for Jim Cramer, will be standing in for me. He will be the host. He's a fantastic guy and an excellent market educator. So if you're not sure how you can make money in the market right now, let us help. During this session, we'll talk about which side of the market to trade, have a mini trading lesson, and Bob will give you stocks and ETFs that may become ripe for high potential trades. Can't attend the live session? No problem. The recording is available to all of our members just after the session ends. Toni's Market Club is a low-priced, high-value opportunity to learn how to trade more successfully and how to make more money. So please join us. For more information, go to the link on this screen or simply click on the button below. And now on to this week's economic reports. Not much on Monday. Tuesday we have existing home sales. Wednesday we have new home sales and our usual crude inventories. Thursday we have durable orders, our usual jobless claims, and natural gas inventories. And of course, hundreds of companies will be announcing their earnings reports all week long. Again, join us for Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market Now.